Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, there's no shortage of issues to discuss as we begin the new trading year, 2010, so let's get right to it with our editor-at-large, Steve Reitmeister, Director of Research, Shiraz Mian, and top market technician, Kevin Matris, as we open up another season of the Roundtable. And probably top on everybody's mind as we start this new trading year is the stock market, because the stock market opened up the year, and we're recording this on the first trading day, January the 4th of the new year. Market opened up on an up note, and seemingly continuing its pattern that it set at the end of 09. Question now becomes, what's in store? Some say the market's following oil higher. Shiraz, is oil going to be a key driver for the stock market here in 2010?
Oil should be a key driver for the overall sentiment on the global economy. So if you have the sentiment on the global economy improving, meaning that all those key markets which drove the demand and as a result the price of oil over the last 2-3 years, and I'm talking about the core emerging markets of China, India, and many of those others, as long as the outlook for those markets continues improving as we have seen over the course of 2009, that should be a key driver for the price of oil, and should have a positive long-term trajectory for this core fuel commodity. So yes, I would see oil as a leading indicator, as a sentiment on the health of the global economy.
Okay, I want to circle back to oil a little bit later, but you looking to the market's performance in January as any kind of a barometer for the rest of the year?
Yeah, they say traditionally as January goes, so does the rest of the year. And if that was true, well, last January in 2009, the market was down about 10%, and yet the market was up 25%, 25, 26% on the year. So
there goes that theory.
Yeah, so those are just things that just so happen to happen in the past. And here again, last year, the first trading session was up about 2% last year on the first trading session, and it went up for a couple more days, and then just completely fell apart. So, anything can happen. It's nice that we come in the new year and it's up today, but I wouldn't give it any great prescient meaning for the rest of the year.
All right. Kevin was probably the closest of everybody here on the panel for calling where the Dow would end the old year in 2009. Now it appears as though the Dow is the key market indicator as we begin 2010, Kevin. Yeah. As a matter of fact, many people are only looking to the Dow as being the not lagging indicator that it once was, but now the leading market indicator. You agree with that?
Well, the Dow and the S&P, they normally move, pretty much the same magnitude. But yeah, a lot of people do follow the Dow. But yeah, I do believe that if we can get a good convincing breakout through 10.5, we're actually through 10.5 today, if we can get through there and build upon those gains, I really do think that we could make an immediate challenge for 11, and I think that, as I said before, I really think that we're going to be able to see 11.8 challenge before the year's over, and it could come a lot sooner than anybody thinks.
Even though volume has been decreasing in the past few weeks.
It's really hard to draw any conclusions from volume over the last couple of weeks, just because most people are on holiday anyways. So I think that's kind of skewing things. But if you can see people come back to the market en masse, and you can see these gains being made with good sponsorship, with good volume, I think that bodes very well for the future.
Steve, do you view one of the biggest challenges to the stock market this year as being the Fed trying to enact or at least come up with an exit policy to stimulus?
Yeah, we talked about that in one of the previous episodes, is that in general, a raising rate environment is usually poor for the stock market, because people see that, because the market's always trying to act beforehand, they see that as the Fed trying to put on brakes, which would be a brakes on corporate earnings, which might slow down people's appetite for taking a look at stocks. So yeah, absolutely. People are very watchful of what the Fed is going to be doing in the future. We all know know they're going to be raising rates in the future. The question is how far in the future and when do they want to start maybe taking a little bit out of the stock market when that happens.
Kevin, some say that without any stimulus, this economy in the second half could slip into a double-dip recession.
You know, I read a story where they said that analysts are split. I think 50% of the analysts are saying that there could possibly be a double-dip recession, but I would put the odds of a double-dip recession way, way, way lower than that. I think that you know, so much of the stimulus hasn't even kicked in, and I think once that stimulus does kick in, it is going to help businesses. They are organically recovering as well. And I also do believe that once you start seeing businesses really start replenishing their inventories, I think that is going to create a whole new wave of additional growth. Moreover, I think if you just look at the growth in the foreign economies, so much business is being done with our trading partners and those foreign customers. I think that that is going to lead to much better things here in the U.S.
Okay, Steve.
As I said, one of the best things that came out of 2009 is that because the government is so inefficient, as we all know they are, they didn't get as much of the stimulus money spent as they had planned on. And so given the strength of that we do see a recovery already with not as much money spent, and that the government still has plenty they're going to put in over 2010, maybe even a little bit into 2011, that's probably a good story that our economy has restarted a little bit by itself, still going to get some help this year, and I think it increases the odds of the economy restarting in a natural way on its own, so that when the stimulus goes away, that the economy can continue its upward trajectory.
All right. Yeah, I remember last year you went on the record as saying you did not see a double-dip recession in the cards for the new year. Shiraz, let's get back to that oil story that we started talking about a little while ago. We started this new trading year with oil above $81 a barrel on some fairly active trade. Getting some support now as we get into these winter months, the peak of these winter months, and also natural gas going to get some support here from the cold that's gripping a lot of the country. But is this only something that's going to be here for the first quarter?
Most likely. My sense is that this increased level of positive optimism that we've been seeing today and in the last few days is primarily seasonal. So it may not really last if the weather turns as it should in the coming days and weeks. But the long-term trend, as we referred to earlier too, should be favorable to the commodity, and it should be upward trending, primarily driven by a recovering U.S. economy, but more so in China and the rest of the emerging economies. And the long-term outlook for crude, keep in mind that it's not just the demand side of the equation. The supply side is constrained. There's not much crude outside of OPEC. There have been even questions by some serious analysts of whether OPEC really has the type of reserves that they claim that they have. So the long-term outlook, both on the supply side as well as on the demand side, is favorable, and as you rightly referred to it as a leading indicator for the health of the global economy. So the near term, primarily a seasonal driven move right now, but the long-term trend has fundamental support.
You watch oil kind of closely. Is there any way that you want to go out on a limb here in the beginning of the new year and say that we might have to make an assault on that $100 a barrel again, or it's too early to tell? It's
not unusual. I would not be surprised as long as this overall view of the global economy and the U.S. economy takes hold, that we are on a sustainable trajectory, both here as well as abroad. Then I wouldn't be surprised if the chatter towards $100 oil takes hold, and then all of these things kind of become self-fulfilling at some stage.
I know I woke Kevin up when I said $100
yeah,
oil.
I want to get on record. I think that we'll see closer to 100 before we see closer to 60. I think the market is really going to make an assault on $100. I don't think 150 is going to be seen anytime soon. You're going to have to see real growth, but I think the market is telling us something loud and clear. It looks like it's trying to move higher.
What's interesting on the oil story is that we made a move just over 80 previously, and then the dollar started to strengthen, and then people started saying, oh, well, one of the reasons I liked oil is because it was a way to play a weakening dollar. And so then it made its move down to what's like 68 or 70.
That's right.
And now it's decoupled, which is interesting.
Right.
So the dollar has been rising, but oil has been coming back, and that's because more of the supply-demand story, which is a healthier way in which to see it rise. So can it make it to 100 on supply-demand this year? I got to say, that would be a little speculative excess on the supply-demand story this year, but it's possible, okay? But going out 3 to 5 years, you better believe we're going to be over $100 a barrel, as the years progress.
What about this dollar comeback that we've seen in the past few weeks? Dollar seeming to regain some of the strength that it lost. Anything behind that of any consequence?
I'll just throw out there, the dollar started to firm up when you had the Dubai crisis, and then you follow on by the issues in Greece. And what people started to realize is, hey, the U.S. does have a lot of debt, has some issues, but who's really that much better, okay? And so there was a little strengthening in the dollar, and if indeed our economy can come back well and our politicians can show some appropriate restraint in spending, and when rates start to rise, the dollar could continue its ascent. I wouldn't say it's a great trade, I want to be in the strong dollar trade, it does, but the whole idea that everyone thought it was going to be going down isn't necessarily true.
Right.
Okay. I told you there was no shortage of things to talk about this time around. Our panelists are going to keep their eye on all of the major issues out there that involve you and investing and as far as guiding the markets and the economy. And we encourage you to keep your eye here to these roundtables every week on Zacks.com. With everyone here, I'm Terry Ruffalo.